the China Association of Automobile Manufacturers has reported that for the first 8 months of the year, both China's auto production and sales surpassed 20 million units for the first time. Production reached 21.051 million units, a 12.7% year-on-year increase, while sales grew 12.6% to 21.128 million units. The new energy vehicles NEV sector was a key driver of this growth, with production surging 37.3% to over 9.625 million units and sales jumping 36.7% to 9.62 million units. NEVs now account for 45.5% of all new vehicle sales. Additionally, auto exports increased by 13.7% year-on-year to 4.292 million units, with NEV exports soaring by 87.3% to nearly 1.532 million units. Vice Commerce Minister and Trade Representative Li Zhengang has stated that China would implement policy measures to stabilize foreign trade and make efforts to resolve difficulties facing trade firms. He noted that the country will endeavor to create a positive external environment for enterprises to explore the international market. On another note, Bloomberg reported that China is preparing to tackle the significant backlog of unpaid bills owed by local governments to the private sector, estimated by some at over $1 trillion. Still in Asia, government data has shown that Japan's wholesale inflation accelerated in August on steady rises in food costs, highlighting sticky inflationary pressure that may keep alive market expectations for a near-term interest rate hike. The corporate goods price index rose 2.7% in the year to August. Food and beverage prices rose 5% in August from a year earlier, faster than a 4.7% gain in July, suggesting that stubbornly high food costs will keep inflation elevated. Electricity, gas and water bills fell 2.9% year-on-year in August, due in part to government subsidies to curb utility prices. Additionally, an index measuring yen-based import prices fell 3.9% in August from the previous year. And in South Korea, the central bank's semi-annual monetary policy report has shown that the effects of a cumulative 100 basis points in interest rate cuts since October 2024 have yet to be fully felt due to economic uncertainty. It added that the rate cuts will start to raise economic growth from the second half of this year. On U.S. tariffs, the central bank noted that the levy's domestic impact was limited, and in the first half of the front-loading of the shipments and firms bearing higher costs, but that it would become clearer going forward. The bank further noted that the housing market in the capital city was cooling, with household debt growth slowing. It was too early to assess if it was in a stabilizing trend, as risk factors remained. These remarks from the central bank's report are in line with the comments of the board member Lee Soo-young, who emphasized the need to reduce interest rates to support economic growth while being mindful of financial stability risks. She noted that the board should assess the effects of recent housing market policies and the impact of accommodative monetary policy stance on expectations of home prices as it determines the pace of easing.